Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 28th of April. So I've seen some good moves over the last 24 hours with some really good reporting from Meta, but look, there's certainly a lot to talk about in terms of levels and where we're going to be going in the next couple of weeks. So let's jump straight into the chart and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see we've certainly seen a big move down this week. You can see we've broken down past the 20 moving average on the daily chart and really started to test these lows down here below the 66-cent mark. Now, look, we've got a horizontal line basically drawn at 68.80, and that's mainly because the 80s and the 20s hold up very, very strongly on currency pairs. But in saying that, you know, the broader picture is looking fairly weak for this one. Basically it's the end of the line. If we're going to have any support at this level, then we've got a chance of holding up above 66. But by golly, if we do break down past the 65 sort of 80 area and we get a daily close below there, I think we're looking for a pretty reasonable move down. So you've got to really zoom out to probably appreciate how far we can go down, because this support level is very, very strong. As you can see, we had very strong support at this level here, which was bounced up by the 20 and the 50 moving average. But yeah, right now we haven't got that. Of course, the 20 and the 50 moving average are pushing down on price, and it's really, really trying to test the boundaries of what is very strong support. What's interesting though is there's not really a great deal of support anywhere after this level here at around that sort of 64.90 area. So you can certainly put a horizontal line there. And basically, if we get to this level here, if we get a break below the 65.80, this is the logical target to go for from a short-term perspective. 64.90 is going to be the level, mainly because we've already got the price action here, a lot of role reversal, we've got support, we've got resistance, we've got a bit of everything going on. But if that level breaks, yeah, then we're starting to look a little bit dire. We're effectively dropping 100 points every time it breaks through a zone now. So, and as you can see, I've got these green boxes here on the potential head and shoulders setup that could be setting up if this neckline breaks. We are sitting at a bit of a neckline, slightly diverted, but I can probably, the neckline I'd be actually talking about is that one there, for that head and shoulders. Okay, it's clearer on a weekly chart, but as you can see, it's definitely there. So if we do get that break, it is potentially a big pattern forming, which is a very, very big pattern, which looks very clear on a weekly. And when you see those sorts of patterns, they tend to find themselves playing out to the level where you need it to go. So I mean, the distance between this head and shoulders take profit is going to be around that 62. Now, I know that sounds horrible, and it's like, oh my goodness, how are we going to get all the way down there? Yeah, it's not impossible if we start to see a bit of a track along, because there's trouble every 100 pips, but it's only 400 pips away. Okay, so very, very interesting. Do or die level, no doubt about that. If it turns around from here and we see a series of higher highs and higher lows, the first test will be the 20 moving average. That'll be the first resistance. Then, of course, followed on by the 67.20, which is where all of this price action is. But realistically, daily close below 65.50, and we're looking at shorting opportunities down to 64.90. And if we start closing up and looking to make a series of higher highs and higher lows, first target is the 66.80, then onto the 67.20, which is the next resistance zone for the Aussie. Okay, we'll move over to the US dollar CAD. And this one's been playing the game quite nicely. You can see we've had a pretty good move. Last week we were looking at it breaking past these moving averages, and it did that for us. And now we're about to get a 2050 moving average cross. So it's looking fairly solid for it. Look, it's very close. We did get very close to the resistance point at around that 137 level. And things happen so quickly. I mean, it wasn't that long ago we were talking about it at 134. So this is why even on the Aussie, yeah, nothing can be underestimated as how fast these currencies can actually move. With the levels that we're at now, though, it needs to either pull back to the 20 moving average or a little bit lower. Either would be acceptable. I wouldn't be totally horrified if it came all the way back to 135.30 and then tested and bounced from there. That wouldn't be a problem at all. But if it did come back down and test the moving average here, that would be perfectly acceptable as well, because that would be a reasonable pullback from what has been a really, really strong move. And all that's giving us is the lightning bolt and verification that we are in a short-term trend up on the daily, and then we can see if we can push up past the 137. On the selling note, if we go down and close below 135.20 and below both moving averages, then we're looking at a potential move down to 134.20. That would be the target. But that's probably the least likely scenario, because I think that we've got more options on the way up, because I mean, we never really want to fight momentum. So, but if we do get that daily close below those moving averages, yeah, the next logical target is that 134.20 area. Okay, over to the US dollar yen, and this has done a whole lot of nothing since it hit the target for us last week. You can see we have seen a little bit of movement down, but we've effectively got three moving averages running basically parallel, and prices right in the middle of all of them. How to pick a direction from there is almost impossible. Okay, very, very difficult. You can see that it's actually trying to rally off this point, and that's the only thing I would say for it, that, you know, we've basically got these wicks here that are very important because of the level that it's at. Okay, we know that it's a bit of a role reversal zone. It is trading just above the moving averages when you zoom it right in, and the target's going to be 135.20. That's what we're aiming for. And the reason that's the easiest target, because it's obviously already been there only a handful of days ago, but it's also a role reversal zone. So really what we're looking for, just to move it up to the previous highs, and then we will look at taking profit around that point. Not really interested in going past there until it's actually broken. Even though we are getting a sequence of higher highs and higher lows from this level, it's starting to take a little bit longer. And I generally want a little bit more momentum before we start picking up and breaking through these levels. So in the first instance, trade up to that level, then let it break through and test it from above. Then we'll be looking at longer opportunities. If indeed the daily closes below this level at around probably about 132.90 would be needing to be a close on a daily to really get me excited about a short. Look, you're only really aiming probably for the first one, probably 132.20 in the first instance, and then at a stretch 131, but that's got a long way to go. And I think that it's not really showing those signs of absolute capitulation. So, and it's got moving averages, three of them holding it up. So it's pretty important for it. I would think the longer one, the longer move is probably the one I'd be aiming for, but we'll let this one play out. A daily close below 132.90, and we're looking at shorting opportunities down to 132. Any more momentum on a smaller time frame on the way up, and yeah, a 135.20 is the target for the long on the yen. Okay, pretty tight trading, but still it's there to actually be taken and scalped. All right, US dollar. And here we are trying to find a bit of a base. I think like it's certainly slowed down the momentum on the way down. You can see we've got very solid lower highs and lower lows all the way down. But now it is starting to stabilize, in my opinion. It's been able to hold above the 100, and it's looking for a way up. I mean, this is going to affect the euro, of course. The euro is the one we're going to be talking about. But you can see that it is attempting to try and not make a new low. It's had enough daily trading now. I mean, we're in a bit of a holding pattern, obviously, because we're in the middle of earnings season. So, yeah, no real surprise there. But it is still tracking under the 20 moving average, and we can't take this seriously until it's actually above the 20 moving average on the daily. So, look, we'll go over to the euro, and that's the one that we're really focusing on, because you can see that momentum has stopped, right? We're at the same peak as we were previously, back early April. And it's as much as it's tried to get up there a few times, it has failed to actually go on with the job and get to the 111. Yeah, the target above it is effectively the 111.50. It's definitely possible if we get a weakness in the dollar index. But yeah, right now, it's sitting right in the middle of nowhere. I'm not really keen on doing anything on it until it either comes and tests the 20 moving average and bounces good and proper off the 109.50, or it actually comes down and breaks the 20 moving average with a daily candle, and then we start looking at shorting opportunities on the way down. It's not really one of those ones where I'd be jumping in, feet first, because it could easily swing either way. It's already showing a little bit of signs of slowing down, and you've got to be really careful when that's happening, because you'll be finding yourself basically catching or holding the bag, if you like, when it does go down, if you are long and expecting it to just continue. It's showing signs of the momentum slowing, and until that momentum picks up, I wouldn't be getting involved in it. So a daily close below 109.50, and we're looking at shorting opportunities down to the next level here at around 108.60, 108.50. That's the next level of support. But if we start to see some momentum, say on a 4-hour chart, for instance, and we see a series of higher highs and higher lows, then we can look at pushing up. But you can see how flat it's actually been even on a 4-hour chart. So a little bit difficult to trade at the moment, the euro, stuck in the middle of a bit of a zone, but showing signs that potentially the big run might be coming to a little bit of a halt. Okay, and finally we'll look at the US 500. Big candle on today's move. Obviously, the metadata was basically a very good report. It was very happy. I'm always very mindful when one company reports extraordinarily well and everyone else has just been around the mark, that the market reacts so heavily. That tells me that the market is looking for good news. I'm not so sure that that's a positive thing for a market that's going to sustain a long move, especially prior to what is a seasonally weak time. May we know most of the time May's a little bit weaker. So when the market's basically shooting off a base because of a really good news from one company, it does worry me, and I take that with a grain of salt, to be honest. I'd be wanting to really see tonight's price action and see where it actually ends up, see if it can actually hold its momentum, let a few more companies report, and see where we're at basically on Monday, because I think it's still gonna be funny trading. We're going to be keeping our trades relatively short over the next few weeks until all of the reporting's out of the way. But again, we are at the nearly at the door of May. We've got non-farm payrolls next week, so we have to be very mindful of that as well. So treat this with caution. If we start to see a big pickup over the next few days before Monday, then maybe we can believe the story and start aiming up to the 41 sort of 80 area again, or slightly past it. But be very careful with this candle. Let's just see what the next one does. I wouldn't trade that candle mainly because of how it played out and what was actually happening before it. Prior to effectively a good news story that the market is certainly searching for. So trade the S&P with a lot of caution at the moment is my best advice, because I think it can be very volatile, and that candle could be replaced very quickly with the same candle on the way down in a heartbeat. Okay, so just be really careful. I hope you've had a really good week's trading. I think we've had some opportunities on the scalping front, but it's best to keep these opportunities short and sharp for now. Let the market settle down over the next few weeks, and then we can look at longer term opportunities and bigger trades. In probably around the middle of May, which is generally when things start to steady up. But in the meantime, we'll scalp. And we'll look at all of these levels that we talked about and look for them to be our support and resistance zones, which of course are our stop loss and take profit targets. Hope you have a great weekend, everybody. I look forward to seeing you all next week.